In our next lecture example, we look at low interest loans. So X Limited provided several of its employees of loans during the year, and the required here is that we are required to calculate what the cash equivalent is. So loan 1, Mr. A's father passed away unexpectedly and the family did not have the necessary funds to pay for the funeral. Mr. A borrowed R2,500 from X Limited to help with the payment of the funeral. X Limited agreed not to charge any interest. The loan was made on the 1st of August, and by the end of February, the loan had not yet been repaid. So, what is the equivalent here, guys? What you need to see is that R2,500 is less than R3,000, so there is no, or there's a null fringe benefit value here. Loan 2, Mr. B enrolled at UNISA to complete his postgraduate diploma in marketing. He had to pay his fees of R20,000 up front. Mr. B did not have the cash available, so he borrowed R20,000 from X Limited on an interest-free loan on the 2nd of January, and by the end of February, the loan had not yet been repaid. So, guys, that R20,000, it is to further his own studies. So, then there is no value, it's a null fringe benefit. Loan 3, Mr. C runs a small business after hours that repairs shoes. Okay, so that's a trade that he is carrying on. He had to purchase a new machine that could glue the soles back onto the shoes. Mr. C did not have the required amount of cash to purchase the machine, so he borrowed R100,000 from X Limited, for whom he works during the week on the 1st of July. Okay, so he is an employee, but he also has a side business. The loan carries an interest rate of 2%. By the end of February, the loan had not yet been repaid, and the period from 1 July to the end of February is 243 days. And during the year, the repurchase rate, make sure that you see what they say there, the repurchase rate was 7.5%. So if the repurchase rate is 7.5%, then that means the official interest rate, remember that's a term, the official interest rate, is 7.5% plus 1%. So 8.5%. That is the official interest rate. Okay, so loan number 3, this guy, the fringe benefit will be R100,000, the loan amount, times the interest that you should have charged, 8.5%, minus the interest that was paid, in this case 2%, times 243 days over 365 days. Right, gives us 4,327 as a fringe benefit. But now what is important here, guys? He used this loan in the production of income. So that amount that he will be taxed on, so this goes into his rands column, he will also get a section 11A deduction for that, as he has used it in the production of income. That is the fringe benefit amount that he will get a section 11A on. He also gets section 11A on the actual interest that he has paid, which is that 2% over there. So 1,332, he gets that as well. So basically, he gets the interest on what he has actually paid and on the fringe benefit amount. Sorry, I've gone a little bit far. There we go. Example 2. X Limited grants one of its employees, Mr. A, the option to purchase a house owned by the company at a price of R100,000. Mr. A is allowed to stay in the house even though he has not yet exercised the option to purchase the house, and he has to pay a rental equal to 5% of the option price, and the repurchase rate is 8%. Alright guys, so this is one of those deemed loans where there's a house that the person is occupying, they oblige or they've got the option to purchase it in the future, and the rent is based on a percentage of the option price. Okay, again they give us the repurchase rate. So the official interest rate is 8% plus the 1% that you have to add, giving us 9%. Right, and they've paid 5%. So basically how it will look as follows: 100,000 times 9% minus the 5%, and it appears to be for the entire year. And there we go. So that's 4,000 rands. Okay, and I'll just make a comment over here which I want you to just be aware of. This house over here, he has the option to buy it for 100,000 rands. Now on the day when he gets that option, so not when he buys it, today when he actually gets the option, you need to compare that 100,000 rands cost to the market value of the property. If the market value of the property is 100,000 rands or less, then there is no fringe benefit because you're paying a fair amount. However, if the market value today, when we get the option, is more, let's say 120,000, there will be a fringe benefit of 20,000 rands. And this will be called that fringe benefit where an asset was acquired at less than actual value. That is basically what will happen there. So just be aware of that, guys. But overall, this second example over here, not as common.